QuickBooks Pro Desktop 2021, Company Preferences, Reminders and Reports, and Graphs. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars Practice Problem homepage. We're going to go into the Preferences by going to the Edit drop-down up top and go on down to the Preferences, opening up the Preferences. Last time, or in prior presentations, we've been going down from the Preferences, from accounting down to the payroll. We're now on the Reminders. So on the Reminders, there's two tabs up top. My Preferences and Company Preferences. These are the default reminders here. Most of them are quite good if you're working in real time. However, if you're entering a lot of data at one point in time, like a full year's worth of data, then the reminders can, that could be a problem. They might not line up quite right. Or if you're working, for example, what we're doing, a practice problem, then there could be some date issues with regards to the reminders. If that is indeed the case, you might want to turn the reminders off. So they don't have, you're not being annoyed with reminders all the time. So we have the checks to print. Let's just read through them real quick, then we might turn them off since we're working through a practice problem. So checks to print. So if you enter checks, then typically if you're going to print the checks from the QuickBooks system, you don't need to do that, but you might be printing checks through the QuickBooks system. In other words, you might have checks that you're writing by hand, or you might do most of your transactions through electronic transactions and have far fewer checks that you need to enter into the system. But if you print the checks through the system, you'll have outside checks that you will need to be printing. So when you enter them into the system, they'll be unprinted, and then you can print them all at one time, and it could give you a reminder related to it. So paychecks to print, same thing with the paychecks. If you're going to actually print the paychecks, and instead of having like a direct deposit or some other kind of process for the paychecks, for the payment to be taking place, it can give you a reminder based on that. Invoices, credit memos to print. So if we have invoices or credit memos and whatnot that need to be printed, we could have a reminder for that. Overdue invoices. So if they're overdue 5 days after the due date, then we could have a reminder there. Almost due invoices. So invoices that are becoming due soon, we might want a reminder. And these could help us because the invoices represent what we give to the client. They're kind of like our bill to the client. So we invoice the client in order for them to then pay us. So if we have an overdue invoice, we might want a reminder to tell us about that so that we can then say, hey, your invoice is overdue. We'll send another reminder. If the due date is coming up pretty soon, we might want to say, hey, it's been 15 days. You're going to be, we have 30 days until the due date of the invoice. We just want to remind you that we sent out an invoice over there. Would you pay us, please? And then we have the sales receipt to print. So we have the sales receipt reminder to print the sales receipt. Now, the sales receipt is a form that we print or will be printed at the point in time that we make the sale. In other words, if we make a sale and we collect the cash at the same point we make the sale, as opposed to us invoicing and collecting cash later, then we might want to print the sales receipt because that might be the document that we actually give to the client, kind of like a receipt similar to a cash register type of process where you give them, the receipt at the point in time they pay. So you could have a reminder there. Sale orders to print. So we have invoice to record. So inventory to record. We could have a reminder basically for the inventory to reorder. In other words, if the inventory is getting low, we could say, hey, we would like you to remind us to order more inventory because the inventory is low, right? So, or at zero, I could say, remind me to buy more inventory if we're tracking inventory. So bills to pay. So we have the reminder for bills to pay days before due date. So if we enter bills into the system, when we pay our vendors, now we're paying the vendors with the bills. We might just pay the vendors by writing a check or doing an electronic payment as the bills become due. Or we might put the bills all in our system as we get the bills, which is a more efficient way to do it. And then think about when we're going to pay them by sorting those bills by due date and then paying them when they're due. That way we can hold on to our money a little bit longer and possibly be less likely to miss a bill and be less likely to be just having invoices in our desk that we haven't, paid because we don't want to pay them yet. So for that, then you could say when you're tracking them, you could say, are they the bills that are coming due pretty soon? If they're within 10 days, that's when I want to write the check. So I put them in there in the system, and then I wait till they're 10 days are due, and then I write the check at that point or make the payment. Memorized transactions due date. So memorized transactions. So if we have memorized transactions in place, you can have a reminder related to them. So they can tell you that they're going to be putting in this transaction that has been memorized as a default transaction. Money to deposit. So if there's money that needs to be deposited, in other words, normally it would be that in that undeposited fund category, meaning, and that would indicate that money has been collected, but it has not yet gone to the bank yet. There could be a reminder based on that. Purchase orders to print. So if we have the purchase orders that we need to be printing, you can have a reminder there. And to-do notes, and we have the to-do notes. And most of these, I'll actually keep the reminders on at this point in time. It might bother us a little bit in the practice problem to see them, but it might be useful to kind of see the reminders popping up as we go as well. But if it becomes annoying to you in the practice problem, just simply turn off all the reminders over here for the practice problem purposes, and then you can choose the ones that you think are most appropriate and that fit your needs. Let's go to the reports and graphs now. So reports and graphs, if I go to the first tab, we do have something in the My Preferences. So prompt me to modify report options before opening a report. So if you want to, adjust the report options or have it tell you to adjust the report options as you open the report. Now the reports are going to be everything that we think about in terms of our financial statements. So the term report, in other words, the definition of report for QuickBooks represents the financial statements, which I would call the financial statement reports, like the balance sheet and the income statement or the profit and loss. And then all other reports, which are basically supplementary reports to those main financial statement reports. So all that is reports for QuickBooks. So these are going to be the options related to us taking the data that we enter and making the end result, those being the reports, including the financial statements, the balance sheet and income statement. So we have reports and graphs. When a report or graph needs to be refreshed, prompt me to refresh automatically. Now this one I like to go refresh automatically, and that means that when you have a report open, and oftentimes you will because you'll be working in the balance sheet, as we will see, because we always want to see what the effect is on the balance sheet and the income statement as we do the data input. Therefore, we will have them open typically in our open windows to the left-hand side and then be going back and forth. Or we might even have two screens open so we can see them on two screens. And then I like it just to refresh automatically instead of having to tell the computer, hey, would you refresh the change that I just made to it? Because I want to see the reports be updated, every time a change has been made. So I will typically go to the refresh automatically, and then don't refresh if you want to have it not refresh, which would be kind of weird. And then we have and then it says click help for information. Okay, graphs only. Draw graphs in 2D. This would be faster. So if you want the graphs in 2D and if there's a speed problem on your computer, that might be faster. I don't think there typically will be a speed factor given graphs. Animation for most computers now, given the fact that most people are streaming videos and whatnot. So I would not do that. And use patterns, so you can experiment with the graphs if you want to use the patterns on the graphs. I'm going to go to the company preferences, summary report basis. Now the accrual and cash basis, you can have the default as one or the other. And you'll see this option, and we will see it when we actually go to the reports. The default will be accrual, so you can change the default to cash. However, even if you're doing a cash basis system, I highly recommend not defaulting to cash unless you have recommendation from basically your accountant to do so, because you really these two things are kind of confusing. We'll talk more about the cash and accrual basis as we go, but notice you can't just jump from the cash to the accrual basis by clicking one of these buttons per se, because it also depends on how you enter the data. In other words, if you have your marker here on the accrual method and you use a cash method system of entering data into your QuickBooks system, in other words, for example, if you just enter all your data into the QuickBooks system from your bank account, your bank statements, then you're basically on a cash basis method, even if you have this accrual mark checked. So it's kind of deceiving to go back and forth between these two. Now, the reason you want the accrual mark checked most of the time is because you might be using some accounts that are accrual accounts, like accounts receivable and accounts payable. And oftentimes companies will actually be on some kind of hybrid method between the accrual and cash method, meaning they might be using, the accounts receivable account on the receivable side, but they pay their bills basically on a cash method and are not using the accounts payable side of things. And if that's the case, you could still do that, right? You could still do that and mark it as an accrual. If you mark it as cash, then you're not going to see the transactions related to the accounts payable because it's an accrual type of transaction. So again, we'll see this on the reports. I would keep the default on the cash basis, even if you're a proponent of, on the accrual basis, I would keep it on the accrual basis, even if you're a proponent of a cash basis system, and then enter the data into your system in a cash basis. That's fine. But if you go to the cash basis down here, it'll restrict some of the accounts that you might be using, and the accrual is going to be kind of the default. So we'll talk more about that as we do the data input. And then we've got the aging reports, age from the due date or age from the transaction date. We'll keep the default at the due date. The aging reports represent like the aging receivables, how past due the receivables are, so we can track how old the receivables are and the customers that owe us money. Reports show items by name only, description only, name and description. I'll keep the default there. Collapsed transactions. So if you like to see your transactions in a more collapsed standpoint, this can make the data input a little bit more efficient because that means you're going to see more transactions on the screen. But it's nice to have the uncollapsed transaction because they give you more detail. That's where we will start. That's where I would start if you're new to QuickBooks. And then if you want to experiment, if you're getting faster and you're like, I want to enter the data faster, then you can experiment with the collapsed transactions here. So reports show account by name, description only, name and description. We'll keep the default as name. Statement of cash flows. Click here to assign accounts to sections of the statement of cash flows. The statement of cash flows is probably the most complex report for people to actually generate. I would think of it almost as an add-on report. It's a financial statement type of report, but you've got the balance sheet and the income statement, which are basically all the accounts that you will be using. Those are our main two reports. Those will typically be on some kind of accrual basis method. And then if you're on an accrual basis method, you may want your information, basically the income statement, the performance report, to be readjusted to kind of like a cash basis, more of a cash basis method. And that's kind of what the cash flow method is going to do. It's going to show you the activity that has happened on a cash flow type of basis. But we're basically reworking the accounts that we already have in place on the balance sheet and the income statement to basically a kind of a cash flow type of format. So in theory, that makes a lot of sense. When you construct it, it can be a little bit confusing in terms of how you construct it. We have two methods, an indirect method and a direct method. We're going to basically be using the indirect method here. But basically, this is where you can go to adjust some of the default settings. The computer can do a pretty good job of creating the statement of cash flows on the defaults, although you might need some tweaks to the statement of cash flows. It's not something that comes out perfect all the time, as does typically the balance sheet and the income statement. So you can make some adjustments to the way the statement of cash flows is going to be presented. Here, we'll talk a little bit more about the statement of cash flows when we get to that. But just realize for most users, especially small businesses, the statement of cash flows is really good to look at, to consider your cash flows. But what you're really going to need for the end of the time period and what you're going to focus on mainly, because you're going to need it for your taxes, are the balance sheet and the income statement. The income statement for a sole proprietorship that's going to be reporting on a Schedule C really needs the income statement, but the balance sheet is intimately related to the income statement. The balance sheet is part of the double entry accounting system. So the balance sheet and the income statement, or profit and loss, as QuickBooks will call it, are your main two reports that you're going to need, at least for tax preparation. And then you can tack on the cash flow statement, which is really nice for informational type of purposes. You want to understand it, but it's not the one that you're going to be checking out or looking at most likely after basically each transaction to check and see if everything has gone the way it should. All right, so I'm going to just click on the next item just to see if we have any changes. So I'm going to click down here. It's going to say, you made changes to the reports and graphs. I'm going to say, yes, please keep those changes. And then next time we'll continue on with the sales and customers and sales tax.